In this video, I will be going over SMTs. Okay, so SMTs is a smart money technique. All right, and this is here's the thing. Some people say SMTs, you always must have an SMT to take a trade, and some people don't care if there's one or not because maybe a liquidity sweep is good enough. I know people on both ends, and I'm not going to tell you, I'm not going to sway you to one end or the other. Some of you might only need SMTs for trades and be like, oh, if there's no SMT, I can't take the trade. And some of you guys might not need them. So, what an SMT is it's basically when one index takes out a low, but the other index doesn't. So, if we get something like this. So, let's say this is NQ, and let's say this is ES. Okay. So what an SMT is it's basically when NQ takes it the low and ES doesn't or something. Now, I'm going to ask you a question. In this example here, we can kind of confirm that, yeah, we're probably going to go up at this point. So this is probably going to happen. Now, let's say we chopped off half of this. Let's say we got something like this. Okay. Let's say we got this. And NQ hit the low and ES didn't, but we didn't really get a move off it yet. Would I automatically be like, oh, we have to go up here? No, because chances are there's probably not an actual setup, which the setup would appear here, to tell us that we're going to keep going up. Whereas in this example, there's good displacement. We have a market structure in both now, and there's good displacement telling us we're probably going to go up. So you're going to see a lot of false SMTs, but a lot of those false SMTs are actually not going to have your entry model. So that's definitely one thing to keep in mind. So right now, I'm on the chart. This is NQ, okay? Let me just turn this on. If you guys want to use this indicator, it's just called AGFX watermark. It has these little things at the top of your screen. This is pretty nice. So I'm just going to go to the screen, and what I'm going to do is I'm going to show you guys ES in this example. So this is ES. Now, in this example here, this is from earlier, okay? You can see there was a bullish SMT from earlier. And in hindsight, you're probably like, oh, this is hindsight. You know there's going to be an SMT right here. Or like, this is hindsight or whatever. But here's the thing. Let me go into replay mode. I was streaming this morning when this happened. So I saw this. And both candles are about right here. And there was an SMT. And people were calling in my chat. But this does not mean we're going to go up. We need an entry model to know we're going to go up. Just because there's an SMT here and NQ took out the low and ES did not take out the low does not mean we're automatically going to go up. We need an entry model. So what would an entry model look like? Well, it might be a market structure shift with a fair value gap formed. So like this. And then along the fair value gap. Or it could be an inverse fair value gap. The entry model I typically take. So we have a bearish gap here. And once that gets closed above, I'm going to long because one, we have my entry model and bearish fair value gap gets broken. And two, my other confluence would be we're at an SMT. And three, my other confluence would be we're really low, we're in discount, we swept a lot of lows up here, and it would make sense to take a long here. So we kind of have three different confluences here. Okay. Now, do I know we're going to bounce here for sure yet? No. So we kind of play two candles. And at this point, I asked my stream, I'm like, is anyone long here? This is starting to look very bullish. We know from ICT that this does not make sense to reject this gap. Why do we know that? Because of all the three confluences I just told you guys. We kind of have an SMT. We are very low. It wouldn't make sense to keep rejecting this. And we swept a bunch of these lows over here. So because we already swept these sell stops, does it really make sense to keep going down to sweep more at this point? No. Now, do we know for sure if this is going to be bullish yet? Not for sure unless this breaks. So I tell people, I'm like, okay, this is starting to look more bullish, but we can't really enter until this breaks. Play the next candle. Play the next candle. Still nothing. Play the next candle. Play the next candle. Okay, now we get a candle that actually closes above this fair value gap. The momentum was really good here. We don't really stop. Now I know that this SMT that was now kind of a hindsight SMT is going to affect the setup we get higher and probably make this a good long. And that's where the SMT and knowing that there's an SMT is going to come into play. So calling an SMT right when it happens is not going to be ideal because there's going to be a lot of fails. But knowing there's an SMT when your entry model forms, such as here, is going to be what's going to be typical, what you're going to want to do. So this is just an example where you get a bullish SMT where NQ takes out the low and ES does not take out the low. Okay, so that's just the bullish SMT. A bearish SMT would be at the highs. And in this chart here, you can actually see there's no SMTs because both NQ and ES both took out the same high. So there's no SMT here. So it wouldn't really affect anything. All right. Now let's see if I can find an example of bearish SMT. Might take me a few seconds here. Okay. All right. So we kind of got bearish SMT here. And this is where it gets advanced. Trying to decide whether I should put this in the bootcamp, but I guess I will. But here we have a bearish SMT. Okay. At this point in time, let me show you. At this point in time, NQ had taken out the high and ES had not. So what do? You look for a short setup. So you're looking for some sort of bearish gap here. Okay. Looking for some sort of bearish gap. Okay, we have our bearish gap. When we come up to here, or this one, let's see if it's singular. Okay, here's a 2-minute bearish gap. I'm going to short this gap because we have displacement down. Now, let me ask you something. Is this a market structure shift? Well, it's a break of structure because we break that low, but it's not really a market structure shift because we don't break the low that kind of made that new high, if that makes sense. You ideally want this low that's like the impulse leg that made the new high to break. So it's not the best market structure shift. So could this still be bullish? Yeah, sure can. All right, now you can see this completely fails. So let's say you were new into the market and you did take the short and you're like, oh, well, there's an SMT. It's a good short and that's it. I'm going to take it. I don't think this is a terrible loss. The only thing I don't like about this is we didn't really get an obvious market structure shift of a low that made a new high, but we did get some sort of break in structure. So you will see a setup like this work some of the time. So let's say you're new to the market. You see a bearish SMT here. You see NQ took out the high, ES did not, and you see this fail. Most likely that means your bias is probably wrong and you're probably missing some sort of high in the left that we're probably going to go to. And you can see we're kind of reacting nicely off of a discount. So from this impulse leg to this leg, you can kind of see we wicked off this 0.50 point very nicely. And it looks like we're putting in a bullish order block here. This red candle sandwiched between these two green candles, and it looks like we're going to put that order block in there. So let's say you take a loss in that, and that's fine. You manage your risk. You're down 200 for the day because you short this for a value gap, and you take a loss. That's completely okay. There's nothing wrong with that. Okay. That probably just means we're probably just going to go higher. And you can see when I check the 15-minute, when I check the hourly, we don't really have any signs of slowing down here. And I would guess we're probably going to go to probably like this high or, yeah, somewhere up here. And that's like when you see something like this fail, that's probably the case. So let's just see what happens. So we just keep going higher the rest of the day. And that just means your price is probably wrong, and that's fine. Now, it's very advanced to tell you why I wouldn't take the setup, but I guess I'll say the reason is because we never broke that low that made the last higher low. So this right here. All right, and here's the other reason. The other reason is actually because it's a Friday. If you know anything about liquidity targets, which I'm going to go over this in a later video, this wick was actually a wick off of news, which is a great liquidity target. And the day I live streamed this day, I took a long down here and I sold everything here. To me, this was the main objective of the day. It was the main draw on liquidity. And once that hit, I was going to shut down the screen. Now, the more you trade, the more you're actually going to realize this is if you ever see or have conviction in a single major target for the day, we get to it very easily. It forms a nice kind of curve. Chances are the price action is probably going to suck after. Now, if we look at the rest of the day, we really did not get good price action. It's just very choppy, lots of fair value gaps getting traded through. And because of my screen time and experience, I would not have touched any of it, because I would have been done by this time, because I know that this was good price action. We got a pretty good move, and I already sold everything at the objective, which is this kind of wick here, which is a big wick that I've talked about this in my course, and I've talked about this many places. So another time I stop trading is when we get the big objective for the day. And that's kind of why you see this nasty price action you kind of see here. It's just not easy. There's no light bulb moment here. There's just chop, and that's why that happens. So that's definitely more advanced, and you'll learn that through experience. So that's definitely a big thing. So let's see if we can find another SMT here. Let me go to the 5 minute. Okay. Okay, here's another SMT. So at the top here, and by the way, you can actually turn on an SMT indicator. I forgot about that. It's by TFO. Let's see if it shows any of these. You gotta put it with NQ1. So it will show some SMTs, but they're kind of lagging. It doesn't actually show this one was interesting. So in this example, we have a high right here on the 5 minute chart at 8:30, and at this time we have a high at 8:30. Now you can see NQ purged the high, but ES actually did not. We actually make equal highs here, and this is actually one of the few times I would not target these equal highs because NQ already took out the high. All right, so let's kind of play out how I would kind of think about this. So let's go to this right here. So this is the 950. This is the 955. Let's actually go further back. All right, so at this point in time at 9:35, I'm kind of thinking, okay, we're going up here. NQ swept the high. We do have a bearish SMT here, but what's the order flow looking like? Well, the order flow isn't bearish. We don't have any market structure shifts. We don't have anything out. We don't have anything here. So I just kind of keep playing price, all right? Play price 2 candles. Play price 2 candles. Still nothing. There's still no bearish market structure shift. We do have a bearish SMT here. We have not made a new high yet on ES, but there's no short setup to even remotely try to short. So I play 2 more candles. Play 2 more candles. Okay, now I see ES did not make a new high. We dumped. We got a big fair value gap. Here's where, honestly, I would look for a short in this fair value gap. Okay. So we form a fair value gap there, and you'd short this because the SMT, and your stop would be above the high, and then you target the lows. Okay. So this is hindsight. This is not the model I typically trade, but this is the 2022 model, and it does work. Now, even though I would not have taken this because it's not my model, it's the educational part that counts. You go from 1, there's a bearish SMT, to 2, okay, now we actually have an entry model and there's a bearish SMT. Does that make sense? So hopefully that makes sense. You're going to see a lot of SMTs, but it does not matter until you get an actual entry model. Okay, so that's the biggest thing with SMTs. So I got a few requests and people asking me to make videos on SMTs. NQ and ES are it's going to be the strongest pair you can look for SMTs with. You can use YM, but not as imperative as if you get like an ES and NQ SMT. But like I said, you'll see SMTs all over the place. Ideally, just make sure they go along with your bias. Let's say I'm bullish for the day here. Let's say I'm like expecting a big bounce here. If you have an SMT already in that direction, it's probably a good sign. Okay, it's probably a good sign. And you can see There was no SMT here, but look, like there's going to be places where you're going to expect an SMT because you're going to be like, well, the bias definitely is bullish. I would expect an SMT here. Now, even if we don't get one, that's fine too, but an SMT just adds another confluence, and it's just when one index takes out a low and another index does not. Okay, you can see there's another one over here as well. See this one? So you can see this is bearish one. Now, you can see that NQ didn't take the high and ES did. But you would not have known this in live time. When would you have known this? Well, you would have known it after we break this bullish gap. After we break this bullish gap here. This is common sense because we break a bullish gap, we have an SMT, and if the bias is bullish, we probably would have bounced off this gap here. Okay, does that make sense? So this is just a common sense SMT where it's like, okay, I see the SMT in hindsight. I see we violated or dumped through this bullish gap, which we probably would have bounced if the bias is bullish. So now I expect us to go to the next low, which is down here on both indexes. The other question I get is, which one do you short or long based off the SMT? A lot of people say, do I short NQ because it's the weaker one, or do I short SM or ES because it's the weaker one, whatever. I only trade NQ 99% of the time. So even if you see, and so let's say I traded ES and I saw ES made a higher high, I'd still honestly short ES. Maybe I just scale more when NQ hit the low first, just in case. But I only do NQ basically. If you trade both, then yeah, short the weaker pair, which this would be the weaker one in this situation. But I don't think it's going to affect you too much. Just be watching both and make sure one pair doesn't hit way before another, because in that case, I would definitely scale out more than usual. So that's kind of how you use SMTs. Again, some people really want SMTs in their trade. Some people could care less. It just depends. Sometimes I use them, sometimes I don't. Like today, I used the SMT for the setup I kind of took today, which was a pretty good setup. So it was right here. This was just a bullish SMT. And again, hopefully my thought process using replay mode helps, because I'm not going to be like, oh, I knew this was going to be an SMT live time, because you really don't until we get the sent entry that validates the SMT. So that is it for this video. I'll see you guys in the next one. And other than that, peace.